All right. Hello, everybody, and welcome to our third and final part of our tax series that we've been doing for US compliance. This is going to be a little bit of a mix of different things that we've talked about previously, but some other things specifically that we're looking at with tax compliance and helping you all get ready for the year, given it is almost completely time to file all your taxes and business taxes are due soon. So hopefully all of this will help provide a little bit more insight on what we're doing. So just kind of just where we're going to start. This is our last one of the year, specifically with this. So of course we're going to pop up our disclaimer per usual, and then again, for those who have not been on any of the webinars with me or don't know who I am, my name is Brandon. I am based in St. Louis, and I am our accountant in residence, helping do all things that are specific to accounting integration and working with our teams to help with tax remittance and literally any questions that they have that can help our users with accounting. So that's what my little intro is. And then, of course, like we talked about, this is going to be the third part. We've already talked previously when we had the Keystone meet with us, the first one, and then we previously did a very general income and expense and kind of explain all the different pieces of income reporting. So this is going to be the final one, like I mentioned. And then what we are going to be doing forward, and we'll talk about too at the end a little bit more, is I'm going to be doing now a monthly series, which will be similar to almost like a town hall, except there's not going to be much of the town hall. It's going to be more of a Q&A, which will allow our customers and users to ask any questions, and they can send them in earlier. And so we can kind of have a little bit of structure and kind of plan with how we will be doing any of the questions you may have, and kind of answer any questions that you have related to accounting with the product, and anything specific that just may come up with accounting or tax remittance or anything. So that's going to be coming up monthly, and that'll be at the beginning of the month. And so once we have more information on that, we'll get all of that sent out. So just keep an eye out. So I just wanted to bring that to light. So today's agenda specifically, we are going to be talking about property depreciation again. I just wanted to recap and give an update there since our last discussion, specifically with that. Also, we're going to be talking about tax reporting specifically with 1099s, what a Schedule C and E are, and then talk a little bit about partnerships. We will talk about how Hospitable acts as the merchant of record, specifically with direct, basic, and premium, and some of the other areas that we do work as merchant of record. And then the record keeping tools that Hospitable has, of course, with reports and QuickBooks integration, and then of course time for Q&A at the end. So that's kind of how our plan will be for today. So I did want to talk about depreciation. So last week when we were ending, there was a little bit of confusing and confusion, and also I was a little confused too. And now I understand where all of that aligns. So we talked about property depreciation, and so of course, as we discussed, depreciation is the allocation of cost of a long-term item or property and deducting the cost over a period of time. The confusion was how short-term rental falls into that. As is it technically residential or commercial? So from my personal experience, again, and we always mention that these you always want to always consult if you have specific questions. Make sure you reach out to your tax accountant or CPA. But from my personal experience as a CPA, we still considered residential property regardless of if it was short-term rental in the short-term rental tax loophole. So we reached out actually to get a little bit more clarity on that and how that all aligns. So generally, if you think about it, residential property is going to be classified generally homes, apartments, condos, and that's kind of where that 27 and a half year to mark falls for depreciation, where commercial is generally thinking more of like an office building, a warehouse, a hotel, and that is 39 years generally whenever you're depreciating it. So with short-term rental, the law has been interpreted a little bit different, which is what my stance was, and that's where I think the confusion came. But we consulted some other CPAs to get better knowledge for all of you. Ultimately, there's a mix of how the law is actually interpreted and what they believe. So some CPAs, it sounds like about half CPAs believe that it should be considered commercial given the real estate aspect, while others do believe it should actually still fall under residential. And the law is up to that ability for the CPA to determine that, and they give their reasoning why. So it's actually depends, and that's why I'm glad that it was brought up last week, so we can at least clarify that it it is totally up to what your CPA and your tax account actually recommends. It's not clearly defined by the IRS exactly, but when we're looking at this, I say basically it's going to be the application of depreciation as it relates is going to depend on the CPA's interpretation. So if you have any concerns or questions specifically to the depreciation aspect of property, highly recommend you reach out to your tax accountant or your tax CPA, and they can determine how they best feel that the tax alignment for depreciation allows for that. So just a little update there, not too much information separately, but again, just make sure that that's something that we wanted to clarify, given there was a little bit of confusion. Now I understand why. So jumping right in, we're going to be talking about tax reporting, and of course, starting with 1099. So 1099s have already been allocated for the year, and you should have received them if applicable from every aspect. But kind of wanted to talk about what 1099s are and what you've seen from them. So I'm sure you've heard about us talk about these over the last few weeks, and you may have received one from either Airbnb or VRBO as well. So basically, 1099s, they're just informational returns that are used to report certain types of payments and transactions to the IRS. So there's three main different ones, and it really, like I said, it's just a piece of a document that you're providing to the IRS, or getting provided to you as well as to the IRS, to let them know, hey, there were some payments made for certain reasons. So generally, when we talk about getting them from Airbnb, Hospitable, or VRBO, those are 1099Ks, and those are issued by a third party settlement organization, typically called TPSOs, and they're for the use of processing of payments or transactions. So, like we talked about, whenever Hospitable's your merchant of record on certain aspects, we are going to be issuing a 1099K if applicable. The other two, you're going to have a 1099 MISC, which is just miscellaneous. This is generally issued to report, rent and other non-service driven income. Sometimes you'll see like royalties on them. They have a lot more boxes generally, and that's what that's used for. So a lot of times, property managers who collect payouts on behalf of the owners, they will issue those to the owners because they are going to allocate, hey, this is your income specifically. And then 1099 NEC is another one, which is non-employee compensation. And you will generally, if you're an owner or host, you'll actually be the one to report these. So you're going to issue these report payments for services performed by non-employees or contractors. Generally, we talk about these. It's like cleaners, if you have repairs or maintenance contractors you use, and then property managers like actually will generally receive these who invoice. So, for example, personally, we invoice our owners that we manage for, and they will send us a 1099 NEC for managing for them for providing that service. So those are just kind of the little pieces that we talk about. And then, of course, like I talked about the merchant record, we'll talk a little bit more about that shortly. So we can dive in a little bit more specifically there. So we will look a little bit more at the 1099K specifically. So there was a little bit of confusion this year because a lot of the tax law did change. And so for the tax year 2025, a lot of our users actually didn't get issued 1099Ks from Hospitable for the reason of the fact that you actually had to have greater than $20,000 in gross payouts from Hospitable, and you had to have 200 transactions under a single taxpayer ID. So it's a lot higher stringency to be able to do that. And so a lot of our users actually didn't receive them, dependent on the circumstances. Again, there are going to be some areas that do have a lower threshold in comparison to the IRS. So a lot of states are going to be Arkansas, DC is one, Illinois, Maryland, Massachusetts, Montana, New Jersey, Rhode Island, Vermont, and Virginia. Those are the major ones. And you may have received 99K because their thresholds may be $600. Sometimes they don't have a threshold at all, and it's you have to do it every time. And so those are the reasons why. So this is generally applicable where right now Hospitable is the merchant of record, specifically for direct premium and upsells for 2025. Things may adjust for 2026 as we've been launching new areas of the product that you're able to use different things for. But right now, those were the main things just for 2025. And of course, when 2026 comes along, we will definitely update more on there and give some more clarity if there's anything else that's the adapted there. So I always do like to mention that just because you may not have gotten a 1099 from us, and it wasn't reported to the IRS, it does not mean that you are relieved of your tax obligation necessarily. That income may still be considered taxable, and you still should be required to report that in your tax return. Of course, checking them, there's going to be certain situations or circumstances that may be different for every user, and specifically in those situations. So it definitely is important to understand, your obligations as it relates to the income reporting in accordance with the federal and then the state and local laws and compliance. And that's why specifically we talk about why certain states have 1099Ks that are a little bit different. They have lower thresholds because they are state, and they go ahead and require it on the state level, but not on the federal level. So then what is actually included on your Form 1099-K? So this goes back to when we were talking a few webinars ago. We talked about gross versus net, and that's where a little bit of confusion comes, and what is income, what's not. So basically, whenever it's reported to the IRS, they're going to consider income as your gross reservation, such as your nightly rate, any of your cleaning or other guest fees, maybe a pet fee or management fee, any ad hoc charges you charge the guest, upsells that are purchased through as well, and then pass through taxes are technically considered to the federal government as income, and then you would actually expense it out later. And I note that a little bit later as well. Same thing, you're going to go ahead and exclude the guest service fees because those are actually paid directly from the guest to the platform. And then same thing, tax remitted by Hospitable. We aren't going to send that to you. We are going to go ahead and remit that on your behalf, and then it's not going to be reported as income. Host service fees are not actually deducted, like we talked about a few weeks ago, from the actual income. You're generally expected to go ahead and expense that whenever you're doing your tax filing. So you'll create as an expense and from the income that you've already allocated. And then same way with refunds or chargebacks that occur after the payout or payment's been processed. Generally, what you'll see if you do it maybe on Hospitable, Airbnb, or whatnot, they'll take it out of a future payout. You still want to go ahead and require all of the income to be reported gross. So you want to take every single thing and make sure that you are reporting every reservation, even if they're taking a payout that necessarily didn't come from a future reservation, just because it is underreporting your gross income. So generally what will happen is if you do have a refund or chargeback, for example, that comes and hits your account later after the fact, then you're going to go ahead and expense that out on your tax filing as well. And then if you do qualify for 1099-K and you have multiple payout methods, each payout method will get its own 1099-K from Hospitable. That's just how we typically do it, and that's the reasoning why. So just a little bit more information on why. And then talking a little bit about 1099s, any miscellaneous and NECs, just because you may have actually received these or you may have had send them out. So we just want to give a little bit more information on this. Like I talked about, some of these are going to be more focused on property manager side of things for specifically getting, a miscellaneous if you are using those. But the NEC definitely is going to reflect a lot of our users who are paying cleaners or vendors for sure. So Hospitable doesn't file any of these for you. You are required to do so on your own as applicable by the federal law. The threshold for reporting is $600 or more in total payments to a single taxpayer or business. And so it's much lower threshold, and that's just federal reporting as well. So again, the payments are going to be reported gross earnings regardless of the payout amount. This is a little bit easier generally because if you're paying a cleaner, you just pay them $100 for a clean. It's easier to track that comparatively to doing, what a 1099-K may report. So it's a little bit easier in those situations. And then if you are still looking at any of this data, you need it to verify and validate. If you have to update any of them or are required to still file because they are still not due until next week to the IRS. They were due to the recipient back in the end of January, but they are not technically due yet because if you file them electronically, you can still do that. If you need any of the data for anything specifically Hospitable, your annual earning report summary is available as well as your earnings detail, and then using metrics as well for any of those specific things for direct will definitely be available. But if you're looking for things for like Airbnb or VRBO, Booking.com, you'll definitely want to report and refer to their transactional reports and year-end summaries provided to you. I know when I pulled ours personally the other day. Whenever you're in Airbnb, you can pull actually transaction per property, and they actually do PDFs now, so it's super nice. And then VRBO, you can actually pull out the payout history, or you can also pull out every single booking you had specifically from their financial reporting, and they just made that a little bit more cleaner specifically there. And so you're able to kind of pull that data specifically and use it, as well as you're also going to be able to reconcile against anything that you may have received from the OTA or from us for those 1099-Ks. So moving forward, so we're going to talk a little bit about returns. I know we haven't really emphasized a lot, but I know that sometimes it's a little confusing, and so we wanted to go ahead actually on this one and kind of talk a little bit more on the actual returns that are going to be filed, and if you have any questions with those, and kind of giving better explanation there. So starting out with Schedule E. So Schedule E is commonly used for short-term rental income as its rental activity, and that's where most rental and passive income will be reported on Schedule E. So general characteristics, basically a property owner or host, they rent out their property to guests. The service provided are in a limited capacity, of course. That means the more of the passive side that we talked about. And then the activity resembles traditional rental operations. So common understanding is that the host is basically earning income primarily from the use of the property itself. And that's the reason why it falls to the rental income side of things. And then report income on the Schedule E. It's Schedule E on your Form 1040, which is just your normal tax return, and that's the reason why. So like I talked about, general rental services. You'll include, like when you're ever talking about general rental services, cleanings between stays, linens, general maintenance, all those things that we talk about whenever setting up an Airbnb or short-term rental, for example, and actually doing those. Like those are kind of the main pieces. And then rental activity, like I talked about, is considered passive income. So if there's any questions specifically with the short-term rental loophole that we talked about, being able to deduct those losses against the last, we do have and I forgot to mention at the beginning, the QR code actually takes you to the very first one, takes you to the last recording. So if you have any specifics there, it has all the information there. And I know Petra does also post some of that in the community, because that's where this Schedule E kind of ties to actual earned income piece. So then moving forward, we're going to also talk about a Schedule C. And so Schedule C is generally referred to as the short-term rental operations management side of things. So generally, you're considering this as active business or activity. So think of it this way: general characteristics that you'll see. A host runs a management company for short-term rentals. The income belongs to an owner, and they manage for them, and they're providing that active service. So it's actually that active business piece. Rental income is not reported to. Property management fees and commissions are the income. So you're not actually reporting the rental income at all. You're just reporting your actual commission and fees that you are charging for those services. And then other types of business related services that may do this, you may see if you own a cleaning company, for example. A lot of users will create a cleaning company if they're moving funds out of that, and so that would be something you consider active as well, since it's different. Or a maintenance or repair company. These services are generally, they're tied to a property, but they're generally more tied to service, not just a rental piece. And so those are common other business areas we see as active. And then again, it's like I said, it's the common understanding the host is earning income primarily for providing a service, and it's active. And so again, this would be reported on Schedule C, which is active income, and then same thing on your 1040, which is your personal tax return. So I know there was a few questions last time about partnerships, so I just wanted to give a little bit more information. We're not going to dive in on corporations specifically, generally because those are for much larger scale. And if you have any questions specifically on setting up a partnership or the business type of entity you want to set up, LLC necessarily, definitely refer to, again, like your tax accountant or your attorney if you use one. There's a lot of good information out there you can be able to determine applicable for that. So we're going to primarily talk about the two types of partnerships, either partnership or 1120 S Corp. So generally, short-term renters may be owned by more than one individual or entity, and that's when they create a partnership, and you may have heard this. So a lot of times, here's some examples of when you'll see that. You have two investors who purchase a property together is a good example. Spouse or family members co-own. So my husband and I have everything's built into a partnership. So we have every single thing that we own together is still in a partnership. So we filed the partnership return. Or you have a multi-member LLC that operates the property as well. So those are very common. And then the partnership will file an informational business return, and then a K1 is provided to the members to report the income on their personal tax return. So basically, what will happen is that 1065 is going to be filed, all of the business income and expenses are filed there. Then you'll receive a portion based off of your allocation of your actual your ownership of the actual partnership, and then you'll get a K1, which just basically gets plugged into your actual personal tax return, and then that would be reported that way. So the partnership itself is not actually taxed. The income actually flows to you, and then you are taxed on it to the members. So that's how that works. And again, like I mentioned, it is on a Form 1065, which is a partnership return. And then those are generally what we would see off of that. And then a little bit more about electing as an S corp. A lot of times we see this a little bit different, and more times it's based off of shareholder, not partnership, and there's a specific reason why. So an S corp is similar to a partnership where the federal income is not paid in tax. It's the income and loss flow through to shareholders and not partners. That's the difference here. So when do we typically see that? So you'll see a lot more of a large scale property management company doing it, a lot of businesses with lots of employees, or if you have an operator that runs a major large scale portfolio, so multi-million dollars, that's where it flows, that you may have to use the accrual method. A lot of those times they'll go ahead and elect an S corp for those reasons. So a lot of times smaller companies will use the 1065, and there's just specific reasons why. Again, it's partners and not shareholders, and that's the same idea. You're still going to be provided a same idea as a K1. And then, like I said, the income's going to be flown through to you, and then it will go on your personal turn the same way. And it's just called a Form 1220, sorry, 1120S, just an S Corp. You'll hear it commonly referred to as S Corp for that reason. So again, if you have any specifics on, what best to set up, definitely reach out to, a tax or a law professional. They'll help you provide the best insight to consult there, and give you the idea of what may be best for you dependent on your circumstances. And then I did actually want to bring in, because we talked about active income. There was a lot of questions last time about self-employment tax, and so I wanted to provide a little bit more information on what self-employment tax is. Not going to deep dive, but at least give you some insight on why and how that works, and so you have the understanding of it. So self-employment tax, basically it's the tax that's charged on the net business income. So after all, you have your gross income, your expenses, whatever that net is, you're going to be charged that tax for Social Security and Medicare. So think of it: a lot of our users and our customers have W-2 still. You pay Social Security and you pay Medicare. Same concept, except you're self-employed, so you will be paying it the same idea, just after the fact. Generally, rental income is not subject to self-employment tax. It's a lot of that active income or business activity is going to be subject to the self-employment tax. And rental activity at times, if you're doing daily or frequently providing housekeeping, providing meals to guests, on staff service, they think more of that is more of like a bed and breakfast type, where it's very active. That will align more where we've talked about Schedule C, and those will generally, fall under self-employment tax. So that's why it can be a little confusing. So I just want to make sure that we kind of discuss how it works, and then the treatment itself. So you'll see down here, this is kind of the idea. Self-employment tax is 15.3%. And that's a mix between 12.4% is Social Security, and then 2.9% is Medicare. Generally, what's going to happen is if you have a W-2, you pay half of that, and then your employer is going to pay the other half. And that's where it gets a little confusing. So for example, Social Security, they're actually paying 6.2%, and you're paying 6.2%. And that will get you that net of 12.4 on Social Security. And the same idea as Medicare is the 1.45% split between the two makes the 2.9. So since you are technically the employer and the employee, what the IRS actually does is it allows an adjustment to prevent you from paying the the employer's portion as well, since you are technically employed and the employer. So it falls underneath that. So what they do is they go ahead and cut that in half and give you a deduction. So basically what you'll do is you'll take 20 of your net income, you'll take 92.35% of the net income, which if you add 15.3 divided by 2, which is the employer portion, that's what that's being taken away of. So they're just basically saying we're not going to charge half of it on it. And that's what they'll determine and say, hey, okay, of this amount, we charge that 15.3%. And then once you're done, that will determine your actual self-employment tax that's due. So what you'll do after the fact is you actually get a deduction, which is 50% of the self-employment tax from your income. It doesn't subtract the tax that's due, and that's what gets confusing. So let's say you owe 5,000 self-employment tax. You don't get to say I now owe 2,500 in self-employment tax. You still owe 5,000, but on your tax return you get to say let's say I was showing I had $60,000 gross income after and that was my net expenses out. Everything was there. You also get to subtract 2,500 from that to get you a lower number, because that will get your adjusted gross income. So you still owe those because it's treated completely separately, but you also get the deduction ability. So it's a twofold. You'll get an adjustment to be able to be taxed at taxing your net income at 92.35%. to get self-employment tax, then you're able to deduct half of that off to get your income lower. And then you, of course, you'll do your actual income, your federal income tax after the fact. So that's just a little bit of information on how all of that aligns. And I'm sure there's a lot more that can go in depth there, but just want to provide a little bit of information because I know there was confusion on what self-employment tax, how much does it get written off, and what I'm actually able to deduct. So, moving forward, we're going to talk a little bit about Hospitable as the merchant of record. And I know this has come up a little bit more recently because we're moving forward with the Verbo official integration. And so, kind of providing some more insight here to kind of give you the same concept with how things work. So, jumping in, when Hospitable acts as the merchant of record, specifically where it aligned originally was with direct, and that was with direct premium and direct basic. So, a lot of our users do use direct premium or direct basic. And so the concept being is on direct premium, Hospital is going to serve as the merchant of record. And that means we process payments on your behalf and the payouts on your behalf. So this also deals with the sales and use and lodging taxes as well. So those are going to be automatically calculated and then collected. And either they're going to be filed and remitted on your behalf, or they're going to be remitted and passed through to you directly for filing. I know there's been a lot of talk there, and personally, I've been working very, very hard behind the scenes to expand that as we move forward with our Verbo official integration, because under our Verbo official integration, we will be serving as the merchant of record. So you will be getting the benefits of the direct premium, where we manage all the payments, we do the chargeback protection, but we also will be dealing with the taxes and the tax filing. So our goal here is to expand as much as possible for you. And so that is part of why I wanted to make sure we talked a little bit about serving as the merchant of record in that case, and how that would work. So again, please know that we're working diligently, and I like to caveat that for tax remittance on our end. So moving forward, so direct basic. If you're using direct basic, basically you utilize and connect your own Stripe account for your payment processing, generally because you're the merchant of record. So you're going to be responsible for determining those taxes that need to be calculated, and then hospital will collect them from the guest, and they'll be filed and remitted by you. So that's how all of that will work specifically from a direct basic side of things. We did want to move a little bit forward and talk about upsells and security deposits, because those are new at the end of last year, and upsells definitely throughout the year last year. And then owner payouts and now invoices actually are live too. So for upsells and security deposits handled through Hospitable, again, we serve as the merchant of record. We process the payouts. Generally on upsells, I like to mention this is like if they're applicable. So on upsells, we will generally see sales and use tax and lodging and occupancy tax. They'll be charged and calculated, same idea. We'll either file or remit on your behalf, or we'll remit them to you as pass through. Generally, security deposits you won't see as much, but certain situations may actually charge any of that for those situations. And then owner payout and invoices. So you create owner statements and pay your owners directly through Hospitable, or now they pay you directly through Hospitable as well. Taxes don't apply to that. And then owner and payouts and invoices are going to be managed through us as the merchant of record. And then we'll process the payment between the two of you. And then these are only available on the mogul plan, of course, because that's where the owner statements do live, and all of that data is built there. All right. So I'm going to go in a little bit and talk about the tools that we specifically offer, and what is available now, and kind of talk through what we have and how everything works from an accounting perspective, to help prepare yourself for taxes and everything else from that perspective. This may a little bit align a little bit more with the mogul plan, because a lot of this data is specifically pulled from mogul, and how things are reported. But again, of course, at least you can understand, how we are reporting, and the way that generally we recommend reporting to, just because it aligns with tax purposes, and that's kind of where our recommendation aligns. So thinking about this, our accounting revenue recognition, if you're using any of our tools from that. So we use everything on a cash-based accounting recognition, which we talked about a few weeks ago. So generally, your income is going to be recognized when you actually receive funds. And that aligns with the IRS standard of reporting tax reporting, is they consider income to you once you've actually been paid. And they consider the same concept from expenses once you've actually paid an expense. That's when you're actually going to expense it. So a little bit different. For example, if let's say someone worked on your house and they repaired something for your short-term rental in December, but you didn't pay them until February, the IRS is going to consider, hey, that's not really an expense yet. You didn't pay it. We'll count it towards next year, and then this year you'll not be able to write it off. You'll write it off in 2026, for example. So that's kind of the reasoning, all of that line. So, and the reason I wanted to talk to like why we recommend is there's a lot of the big reasons of why, and how all of that aligns specifically with short-term rentals. So generally, hosts are actually going to be paid on check-in most of the time, based off of the payment processing date inside, and that's the goal, is to kind of align that cash basis accounting with when you're actually getting payouts, because that's the same time that you're actually providing the service is on check-in, and so it all aligns that same way. And then the concept of using cash basis, you're actually actively able to track your income as it would be earned, for example, since it's based on check-in, and it allows for you to really understand the cash flow of things, like how much money do I have on hand at a certain time? Do I have enough funds to actually cover the cleaning services or supplies that I'm using? And it really gives you a true sense of what's available today and why. Like we said, it really helps to really have a lot of the tracking of do we have the funds available to be able to do this correctly, and make sure that we are being able to pay our bills and expenses, and also have some income extra as well. And then, like I mentioned, it does align with tax and compliance reporting, because that's how the IRS sees it, and they say once it's paid, once it's received, those are when we go ahead and actually allocate those as income to you on your tax return. So then, talking just a little bit about what is the baseline of accounting. We've talked about it a lot. What are we using? What may be using for mogul versus what's not. So specifically, what are we using to determine your accounting, and what pieces are you using from like a 1099K perspective? It's all those reservation financials. So those nightly rates, those cleaning fees, any additional fees that you have, ad hoc charges, upsells, all that's going to be considered income. But then also on top of that, those other pieces that we talked about, those host service fees, are going to be expenses. So you'll want to track that as well. And those are major pieces. We get all of that data specifically, from the OTAs, and we're able to track that a little bit aligned from a property manager side of things. If you're using mogul and using the owner statements, just to give some information there, those are going to be built off your commission agreement. So you're going to tell us, hey, I collect X fee, I get this percentage based on the accommodation, I make sure this gets passed through here. That's all built off of, and that will tell us what is your accounting, what is your actual income to you, and that aligns with the reporting. We also use adjustments. So if there's any adjustments that's on a specific booking, for example, let's say you provide the guest an additional discount, you can adjust your actual income there, and kind of align what that actually would be, if it's going to reduce the income, or if it's going to add to the income, if it's an upsell or whatnot. And then transactions. This is specifically, like I said, it's part of the mogul plan, and this is where you can add basically expenses. If you had you wanted to track your mortgage payments, if you wanted to track your utilities, your phone bill, internet, all of those pieces, all of that is going to be aligned, and those are the tools we provide specifically to help align your accounting. I did want to actually bring in a little bit more on the business types, because we talk about how our tools are available and what the two business types are. So there's going to be, three business types. Owners and arbitrage are going to align very similarly, and then property managers, and we'll talk about them in a second. So first off, let's talk about owners and arbitrage. So if you are using our accounting for anything, and this also aligns with our reporting, this aligns with QuickBooks. If you're using any of this is going to talk about how all of this actually is tracked for you. So for example, whenever someone books a reservation and they stay with you, our reservation financials are going to be recognized from the accounting side on the day of check-in, basically aligning the same idea we talked about with the cash basis model. That one's check-in, that's generally super, super close to payment processing date. Usually within 24 hours, you'll get it within 24 to 72 hours. So we try to align there. So that's when we'll recognize income for you. It also allows you to allocate and track your income depending on your specific setup. So let's say say I collect cleaning fees, but I don't collect pet fees. And actually, I just want to make all of my fees in one account. You're able to track all of that specifically, depending on how you actually would like to track it. Again, as we've noted, income's still going to be reported as gross, because we want to make sure we're reporting correctly from a compliance standpoint, and the same way you would to the IRS. And then, as well as, we have the ability to add transactions within Hospitable. So you can use either our reports, or you can use QuickBooks, and that allows you to actually track your accounting without having to go through another software. You can actually put everything in Hospitable in real time and track them for your properties. The two caveats I do mention is that an owner and arbitrage are going to have two different accounts. An owner account, the one different account they're going to get is a mortgage account, where you're able to track your principal, your interest, all of that you're paying on a monthly scale for your actual owned property. Versus arbitrage, since of course you're renting your property, you're going to be able to track your rent payments for the property itself, and so that allows you to actually align your accounting as well. Moving forward a little bit, we'll talk about the property manager type. So there's going to be two specific types of managers. There's going to be ones who use statements and one who do invoices. So statements are the concept that I'm a property manager. I actually am managing the property, but instead of the payouts going to the owner, I actually go ahead and collect those payouts and I'll pay them out the following month or however we've agreed to. So your reservation financials are going to be recognized the exact same way. They're going to be recognized on the day of check-in because that's again cash basis. You're receiving the payouts. We're going to align the same way we are all the other sides. The difference with this is we're actually going to allocate what income's yours versus what income's actually the owner's. Because whenever you're reporting this information to the IRS, generally, you aren't going to reporting income that's not technically yours. So all of that income that's coming through from the property management side of things. So if someone stays, they it pay out $1,000. You're only really getting a portion of that. So because you're charging your commission or whatever, and you may be receiving a pass-through fee, a pet fee, cleaning fee, whatnot. So it's not technically all of your income. So if you think of it the same other way, if like I would actually the owner receives the payouts and then they paid me, they're gonna say all of this income's mine, and then I'm gonna pay them their fee, which is an expense, and then that fee that you get is income to you. And that's the reason why. So we allocate all of that accordingly to make sure that everything is aligned specifically for your reporting. The difference here is once you mark a statement as paid or utilize the new owner payout feature that we have, it actually is going to take everything that we've separated that says, hey, this is not my income, it's actually the owner's. We'll go ahead and reduce that amount and basically deduct that out and say, okay, great, you've now paid them, all good, we're squared away for the month. And so that's how all of that accounting aligns for you, specifically with the property manager type that do statements, and then property managers who invoice. So this is completely separate. It's very easy, very basic because they receive all the income, like I mentioned. That's their income. They expense it out because they go ahead and pay you your fee, the fee that you're charging for if it's a flat fee, a percentage, and then whatever fees you would additionally charge, ad hoc fees for repairs or whatnot. We just basically say once it's paid, because that's how cash basis works, the income's yours and it's done. So it's allocated based off that. So it's a little bit easier because it's just once the statement's paid, it's all done. So that's great there. And we do also, like we've talked about, use the Airbnb co-host payouts. That's the same idea. That's going to be based off your statements. And so it's going to be recognized on the day of check-in. Same idea because you should be receiving those payouts in real time. Okay. And then talking through the two pieces, basically we just have a little bit more to cover and then we'll hit in Q&A, is Hospitable's native accounting. And then I know that my picture's in front of it. I'm not sure. I'm just going to jump off so you can still see the actual thing with Hospitable. So what we've built out is a native accounting piece that you can use a built-in, thank you, Petra, a built-in profit and loss statement. And so that basically allows you to not have to use another software integration. You're able to actually use what's in Hospitable and track all of your income and expenses in there. And so it's a nice feature of having everything in one spot. And so what we've done is we built out a recommended chart of accounts based on your business type, like we've talked about. Of course, if you're manager versus owner, different things, and that kind of aligns specifically for those reasons. You'll see this is my profit and loss statement. I just pulled it quickly. This is the one that we have for the month, and it allocates. You can see all of the income based off our Verbo bookings, our Airbnb bookings, our cleaning fees, extra gas fees, breaks all of that out based off of what the OTAs are providing us. And then also, like I said, it reports everything gross, and then it has our host service fee in there too. So it's super great for tracking. And then like I said, you can add these transactions if you wanted to go track your mortgage, track your utilities, track any other repairs or anything else that's tied to the property. And this allows you to have a very, simple, P&L statement that has all the data that you're looking for and need. Again, like I said, it's going to be based off of how your business is set up. So if you have a reservation commissions, you'll see that instead versus how we have it set up, specifically since these is an own business. And then allocated, of course, you can have business and property level expense reporting. So I did not mention it prior, but let's say you are a property manager. You are saying, hey, you know what? I get paid. Sorry, I charge Hospitable. apologize. There we go. I pay Hospitable once a month to use their software, and that's a business expense. And so I'm going to go ahead and allocate that to the business and not a property. And so you're able to actually allocate things specifically to a business rather than just a property. So a lot of times we'll see, advertising, so like website, bank fees, things like that will go under the actual business and not the property level. And again, all of this is included under the mogul side of things. And then quickly, I'm just going to high level talk about the QuickBooks integration. Hopefully, we'll have more to come this year with some new integrations, more developments. But this is kind of where we are right now. It's just we have the QuickBooks integration, which has been developed over the past year even more and keeps evolving. So we have a direct integration with QuickBooks Online. I know some users I've met with are they use the desktop software. It is only available for online, so you do have to use the QuickBooks Online for it. Same idea, real-time income and expense reporting and expense with in accordance with your property management type or owner type, whatever that may be. Same kind of concept that we talked about, how all of that's allocated, and we track all of that the same way that we explained a few slides ago. And then we actually use business and property level tracking, which they use classes. So that's just their tracking mechanism. If you're using the hospitable side, we just track because we have the ability to based off your property or business. Within QuickBooks, they use classes. So that basically means every time we send an entry and transaction so to QuickBooks from Hospitable, we'll basically tie a tag that says this is this property or this is this business, and that's how that you're able to, if you wanted to pull P&L out of QuickBooks, that's how you're able to track it. Um, Property managers with statements will automatically allocate the amount due to owner per reservation. So we talked about that basically we will separate the income if you're an owner versus if you are the property manager that collects payouts versus the owner. And so that will actually allocate the amount that's due to them. So you're keeping all of that tracked in real time. Same idea. We recommended a chart of accounts, but what's nice about this is if you've used QuickBooks or you want to use your own chart of accounts that you've used in the past or want to create new ones, you can actually map those accounts that we've created directly to QuickBooks to whatever account you want. You can create new ones or you can use ones you've used in the past. So it gives you a little bit more flexibility there. And then currently the sync date is all the way back to January of 2025. And forward, you can start today and go forward. You can choose 3 months ago, but it gives you the flexibility. We do always mention that QuickBooks does require separate subscription. So if you are using QuickBooks, it is going to be separate subscription. We just provide that integration with the QuickBooks account. So that's kind of how all of that works. And then please be on the lookout. I am going to be making some actual new QuickBooks videos to kind of walk through how the setup is. If there's any questions with setup specifically with our users, to be able to say, this is how, if you're setting up an owner type, this is what information you'll see. This is how you're mapping. This is what you're going to see. And this is what's going to go into QuickBooks. So it'll give you a little bit more hands-on ability. So you can watch videos and kind of do it in real time and kind of work through the QuickBooks integration if you have questions there and kind of get all of that aligned for you. So that's more to come, and hopefully in the next coming weeks that will be the launch for you as new help articles and help documentation. So from there, I think that's pretty much all I had specifically. So I'm not sure if there's, specifically, I can't see the chat. So I'm going to see if there's anything in the Q&A. Oh, there's a few. Perfect. Okay. So I'm going to. All right. So if there is other questions, Petra is, in the chat, so she can add them. But just a few specifics that we can ask. Is QuickBooks integration also only available for mogul level? Yes. QuickBooks integration is only available for the mogul level, and that's where the integration lives, is under all of that, where it's tied to my business and it's tied to those property levels. But also, I did see that Megan, you do have another question, which is aligned with what I was about to answer, is where do we find the P&L inside the Hospitable dashboard? The P&L will live under Mogul as well. So it's provided to you under Mogul. All of the current accounting tools and treatments that we have, that we allocate all of this data for you, that's going to be under the Mogul plan. So it'll be under the reports of Mogul. And I'm sure Petra can share if anyone's interested in trying out a trial or working with our customer success team. They can help get any of those things added, so you can kind of explore and see if that's something you wanted to see or try out. Metrics is still completely usable for you, so you still have access to use metrics as well if you're looking for any of that data. It's just we're not going to allocate any of that information and basically do the accounting real time management for you, and that's where all of that lives under the mogul side of things. Okay. So if there is there currently an option to have hospital remit and file on our behalf with direct premium, or is that a benefit that coming with the feature? So if you are on direct premium, we automatically will file and remit any taxes that we are approved to do so on your behalf. So and I'm sure Petra can share if she has our help article specifically for tax remittance. So if you are on direct premium, it is automatically done on your behalf. We will go ahead once we have a booking go through, we will process the payment. We will collect the taxes. If there are any that we don't remit, we will send those to you to go ahead and pay. But real time, we do that. Like I said, we are actually going to be working on notifying our users in real time a little bit more, specifically with our notifications of local jurisdiction remittance. It's expanding very rapidly. I'm working very hard to get that to expand quickly for all of our users, but it is taking a second. But it's going to be in real time. So you aren't going to be waiting, a month or two to see it go through. It's going to be in real time. So keep an eye out on your specific state, and if there's a local jurisdiction that we are adding, we'll go ahead and just go ahead and put that in there and update the help article with that. But we all are also going to be updating the community more regularly, so you'll see those updates coming in real time as well. All right. Okay. What state and local taxes, sales, occupancy, lodging does hospital pay on behalf of owners? Again, this, of course, is basically if you are using direct premium or if you're using upsells, we do it on behalf of upsells as well. I didn't just mention, I'm sure that Petra was able to put that in the chat, but there is our help articles that do actually show all of that information for you, and you can see specifically to your state. And then your second question, is there a plan to offer paying off the taxes that aren't currently county occupancy, for example? Offer paying off. I'm not sure necessarily what the question is. But basically the only way currently to be able to remit taxes on your behalf is going to be on direct premium or through upsells. Or if you're looking to remit on your own, you would be using direct basic at this time. So that's how all of that would specifically work. If there's clarification on that question, like more than happy to answer. Just want to make sure I answer it correctly for you. All right. Do you have to join QuickBooks if you don't have it already, or just join the Mogul program? So if you want to use the QuickBooks integration, you will have to also join Mogul, and you have to use the QuickBooks integrations. You'll have to get a subscription with QuickBooks to do that as well. Some of our users actually got rid of QuickBooks and no longer use QuickBooks, and they just use the Mogul because they're able to track all of their information in our reporting for them. And since it does it for them, it creates a P&L, so they don't have to go through specifically and actually go through QuickBooks and have another integration. And hopefully we're going to be building that out again more and more over the coming year to give you more flexibility and more ability to track a little bit easier for you as well. And I know that more of that's coming on our roadmap that we've talked about already. So yes, if you do want QuickBooks, you'll have to have QuickBooks. But if you want to just use the Mogul P&L, you are more than welcome to use that on the Mogul plan. Does Hospital reflect all revenue and expenses for all platforms, Airbnb booking and VRBO? So whatever the OTA is providing to us, we are using. So if the OTA breaks out the revenue for reservation minus the discounts and the fees, as well as the host service fees, all of that data, we do pull that specifically from them. So all of them, as long as they are providing that data directly to us, we are tracking all of that. So if booking.com, for example, you have a host service fee that you pay them, same idea that you would for VRBO or Airbnb, we are tracking all of those host service fees and the gross revenue. If you have any specific expenses that aren't tracked, that's something, like I said, you will just definitely need to be sure that you're tracking on your end. And that's something we always say is like, if you're tracking, your utilities or whatnot, but anything that comes from the OTA, we do track for you and the accounting side of things. Currently, taxes are being remitted by Airbnb and Verbo. You're talking about paying the taxes on direct. Correct. Yep. So I am talking specifically with us as her hospital's merchant of record when we are merchant of record and remitting taxes, which are going to be on direct premium bookings. We've talked about it quite a few times, and there's been a little bit of confusion. But whenever you are on the official integration with VRBO, Hospitable is required to act as the merchant of record if we are processing the payments. And with that, we will be remitting taxes on your behalf for those bookings if we are, approved to do so. So that's where tax remittance is extremely important for our users right now. And we want to emphasize that I'm working, diligently with our team to be able to expand tax remittance to our local jurisdiction. So right now, it's anything through Airbnb or VRBO is going to be through them. It's only when Hospitable is the merchant of record that's when that tax remittance comes into play, which, like I mentioned, would be for direct bookings and upsells. So. If you only use mobile, can you export that data for your CPA to use? Yes, you actually can. So there is export ability. So you can either export via, I believe, PDF, or you can do CSV. Don't quote me. I know for a fact CSV is one. But yes, you can go ahead and extract all that data. I've had a few users, they actually do that. They'll extract the report. And then what they'll do on top of the report is they'll provide the transactions from either Airbnb, VRBO, Hospitable for direct bookings, and so the CPA that or their accountant can actually reconcile for them. So you can actually pull all that data directly, and then they can have it, and then they can reconcile against the actual transactions that came through. So. Hospitable does not pay taxes for Booking.com. Correct. Correct. We are not the merchant of record for Booking.com at the moment. We don't do anything specifically with that. Only for direct premium right now, and for upsells and anything else. Like I said, that Hospitable is the merchant of record. So those are going to be specific to when Hospitable acts as the merchant of record, and you'll know whenever Hospitable is acting as the merchant of record because we've been very clear to explain that to our users and make sure that they understand, because you'll have to go through our payout processing system, which is through Adyen, and then you'll be able to assign all of that. So you'll know specifically whenever we are actually the merchant of record. Oh, perfect. Clarification. Yay. All right. Is hospital rolling out the collect and remit of local taxes that are currently remitted by owner, for example? Yes, that is the goal. That's that's what we're pushing for right now. I That's what I mentioned is what we are doing, and I'll give a little bit of clarity on that. And I think that will probably help our users understand. So what we were doing originally was our goal was to remit for as many users as possible on direct premium, and that's what we started with. So now, knowing that VRBO is going to be part of the merchant of record for us, we are also parroting that with our specific booking volume and our amount that we are seeing from our users. So we're actually looking not just at direct bookings anymore, we're looking at the booking volume and the amount of users that are going to be utilizing VRBO as well. And that's what our expansion is really focused on right now too. And so you'll see things, you will see more and more. I'm working right now in some of the major states, like you should see more of California, Colorado, North Carolina, Georgia. Those are some of our major ones we're working in. Florida, of course, is a major one that we're working in. So we're doing the best we can at timely manner for you all as well. Again, I do mention, sometimes we are working in compliance with the local jurisdictions, and that's what's taking time, is making sure that our accounts are set up correctly. We're doing everything in compliance with the laws and regulations that they have, and the state laws as well. So please keep an eye out. We are working, and the goal here is to expand as much quicker as possible. That's my one of my major goals this year, is to get as many tax remittances as possible. So that is the goal here. We are working, and I can tell you, Georgia is on my list. I've been working there already. So hopefully, maybe positive answers coming soon in the next coming weeks for your specific location. So just keep an eye out, like I said. Do you know when you will be the official merchant record for other OTA sites? Will this be announced so we will know to look out for it? Yeah. So right now, at the moment, we are only merchant of record for direct premium and upsells with the Verbo official integration. Once that onboarding happens and all of that's rolled out over, they're hoping over the next coming weeks that will be rolled out to our users. you will have to go through the process to be onboarded. So it's not going to be a shock to you. It's not all of a sudden we turned on something and okay, we now are merchant of record. You're going to go through the process to have the integration correct and all of that. So yeah, so we will make sure that all of that is very clear and held to you to your understanding. And you'll, like I said, it will be very known to you that hey, we are moving forward as a merchant of record. And like I said, you'll know because it's not going to be a flip of the switch. We have to make sure that we are going ahead and making sure everything is aligned specifically with that integration. So yeah, of course you will absolutely know. For clarity, if I have direct premium, do you remit taxes across Airbnb, Booking.com, Verbo, and do arbitrage still use Schedule E? Okay, so part one, if I have direct premium, do you remit taxes? So again, that goes to merchant of record. We are only merchant of record today for direct premium. So if Airbnb does, like if they, they're processing their own payments, Verbo's processing their own booking, they process all their own payments. All of their taxes are going to be remitted on your behalf if they do so by them. We are only doing ones that we, excuse me, are the merchant of record, which is payment processing. And that's the reason why. So we are on direct premium right now, upsells, and then with the Verbo official integration that's coming over the next few, hopefully over the next few weeks as it's launched more. And then question was, do arbitrage still use Schedule E? Generally, I say the answer is yes because Schedule E is passive income, rental income. You'll generally see this on Schedule E. The only difference is as an arbitrage, you're able to write off rent, and so the rent expense you actually pay to the owner to actually use the house, you are able to write that off as an expense, where the owner gets to write off the mortgage interest. And that's the reason why. So you're able to write that off generally. But if you ever have questions on that, definitely check to make sure if, for some reason you are using arbitrage and it does end up, aligning towards Schedule C, which would be active income. It always depends. Like I said, if it depends on the service you're providing. So if you are basically doing an arbitrage and you're almost treating it like a bed and breakfast, that sometimes may align more with the Schedule C. So just check and make sure, with your tax accountant or your tax lawyer if necessary, or just general to make sure that, you are aligned properly. But generally, yes, Schedule E is generally where most short-term rentals are going to be housed at. I think that's all the questions I have in my Q&A. If there's anything else. All right, cool. Well, that's great. So I will move forward with our final piece where I know Petra always posts in the community. That's where I will be keeping updates in there. So just be sure she's going to go ahead and post a recap and then some extra materials from what we've talked about today, as well as over the past few weeks. And then, like I said, we will be releasing that monthly Q&A, which these are great. Like I'm super excited for it. I'm super excited to get these questions. Even with the structure that I had today, it's super nice to see that all of the questions about tax remittance and and basically what is on the plans. Like I'm so excited to see how this can help our users going forward. So the goal here is that we will be doing it monthly, and it will be regularly monthly, similar to the town hall that we offer. And then we'll have some structure. So maybe as we evolve, we may say, hey, we're going to have at least half of it's going to be specific Q&A if you have anything about tax remittance or if you have anything about income reporting. So there's going to be a little bit of structure to it, but we will be making sure we post that. And I'm sure Petra will keep an eye out to have that posted either in the community as well. And then we'll make sure we market that to all of you. So then you're able to join us once a month and then ask me anything and we can get some, accounting answers for you and help all you all out. So I think that's it for me today. If you have any questions, please feel free to reach out, as well as in the community. And then these are also posted on our YouTube page, and you can use them for the future. But if not, thanks guys for joining us for either all of them or some of them. And I really appreciate all of you hanging out with me today. So have a good one, everyone.